PayPal stock is down 75% in the past 5 years, and in this video, I'll explain why I believe this is one of the best stocks to buy now. I am going to cover multiple things in this video, so I'll leave timestamps in the description in case you want to skip some parts. First, let's start with the catalyst. Then we'll look at the valuation and we'll end up looking at the risks. One of the reasons PayPal stock is down so much is because people say PayPal is a dead company. However, if we take a look at the revenue, it has grown from $9 billion to $32 billion in the past decade. And analysts are still expecting solid growth as they have PayPal reaching $33 billion this year and grow to $43 billion by 2029, which means between 6 and 7% annual revenue growth. Profit has also seen great growth as net income has grown from $1.2 billion to $4.9 billion. And one thing that I really like about PayPal is that they have even more free cash flow, currently at $5.5 billion, and analysts are also expecting profit to grow. They have PayPal making $5.47 per share this year and grow to $9.23 per share in 2029. If you assign a 15p to the company then, it would make it a $138 stock, meaning 131% returns from current levels. PayPal also has a great balance sheet as they have $10 billion in cash and $12 billion in debt, so they have a lot of cash. And they are using this cash to return value to shareholders. They now pay a small dividend, which has a yield of 0.94%, which means you get 54 cents per share annually. I actually don't like this because I believe dividends should be the last resort to use the remaining cash. I would prefer if PayPal used this cash to reinvest in the business or buy back more shares, which they have been doing, and this is something that I really like, and it is another catalyst, because this means that as investors, there are less shares outstanding, which means you are sharing the profits with less people and you own more of the company. It is important that share buybacks are done when the company is cheap and not expensive. And I believe PayPal is cheap, currently trading at a forward PE of 10 and price to free cash flow of 9. But in order to take a deeper look at the valuation, I use my Google Sheet, which tells me what returns you would get if you buy the company today based on the assumptions about the future of the company that you put in. And because the stock is currently trading at around $59 per share, this means that if my low assumptions occur, you would get a 14.5% annual return on your money, middle 21.2%, and high 28%. And I believe my assumptions are reasonable as I have PayPal growing revenue between 4 and 8% annually for the next 7 years, averaging a profit margin and free cash flow margin between 13 and 17%, and I assigned the PM price to free cash flow at the end of the 7 years of 14, 16, 18, and I assume they buy back 2% of their shares. But if you want to make your own assumptions, I'm going to leave a link to the spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And as you can see, this is the main reason I buy stocks and why I am buying PayPal, because the price looks very cheap. Now let's move on to the risks, which in my opinion are only two. The biggest risk that I see is competition, because there are tons of companies in the fintech space. However, I believe PayPal is well positioned because it has the security mode, meaning people trust it. And I believe Venmo is a great mode as well. It has even become a verb. The other risk is that revenue growth percentage has been declining. However, their new CEO, Alex Chriss, who is very young for a CEO, believes in innovation, and last quarter they reported 7% year-over-year growth, and they also grew on net income and profit margin. Now regarding the latest news, PayPal submitted an application to establish themselves as an industrial bank, and they are targeting providing loans to small businesses, as well as establishing some interest saving account. And Alex Chriss did the following statement: securing capital remains a significant hurdle for small businesses striving to grow and scale. Establishing PayPal Bank will strengthen our business and improve our efficiency, enabling us to better support small businesses' growth and economic opportunities across the US. The lending side is great, but what I think is that they are trying to create an ecosystem, like Apple for example, so that people use all of their products. Finally, I want to talk about where the price is going, and as a long-term value investor, in the short term, I have no idea and nobody does. However, if you decide to invest in PayPal, you have to be okay with the company falling 10, 20, or even 50%. and take into account that the current market is heavily overvalued. If we look at the Shiller PE ratio, we are basically at the same level we were in the dot-com bubble. Prices are likely to fall, which by the way is great for value investors because better opportunities will come. But what this means for PayPal stock is that if the overall market falls, PayPal is likely to fall with it. In that case, I will dollar cost average on the way down. PayPal in a way reminds me of Meta when it was under $100 per share, which I bought, or when Alibaba was under $100, which I also bought. And in conclusion, I believe the valuation has become incredibly cheap for such a well-established company, and the risk-reward is one of the best out there. By the way, if you want a discount on stockanalysis.com, the best place for stock data, grab my code in the description. I hope you found this video valuable. Let me know what you think about PayPal stock in the comments, and I'll see you in the next one.